Hey everyone, Paul here, and I wanted to put this video together not to brag, not to say, hey, look how much money I have in my portfolio, look how much money I've made. That's not the purpose of this at all, but I wanted to give you some context to say, okay, so my portfolio is worth about $56,000 right now, and I just wanted to give you a sense of what I own, how it's done, because the Dow has had a record day today, and it's not just that the Dow's had a record day. I think the important thing to kind of keep in mind with this is that, before the presidential election, there was a lot of people out there, a lot of investors that were, on the sidelines, and they said that there's going to be too much risk and that, you don't want to be involved in the market at that time. Well, what actually happened? Well, you look at the actual week of the election and kind of before the election, stocks were up. After the election, stocks were up. And that's kind of I think a function of a couple different things. So I think, of course, as of today, so we're looking at November 9th, the market is actually pretty happy about some positive news with a vaccine, saying Pfizer, had a 90% success rate with their vaccine. So certainly that's driving the market higher. But again, I think that, even some of the certainty from actually being able to declare at this point a presidential winner, I think the market's been cheering that as well. But all that being said, let's get into my portfolio because, again, I was holding through the election. I mean, there's always that temptation to sell. I did have a little bit of cash. So I had about $10,000 cash heading into, this week. Certainly wish that would have been fully invested. But, on the off chance that there actually was going to be kind of a pullback, I wanted to have some buying power available for that. And kind of even with that in mind, I actually deposited an extra $2,000 into this account to have even more buying power to be ready for that. So when we look at some of these things, it'll show you my day change. And my day change in total includes the $2,000 that I added, and then the rest of it is going to be the profit that I made today, or my unrealized gain today. So, we can see up at the top here again, like account value over $56,000. How much cash I have, it's over $13,000. So the market value of the equities that I own, over $43,000. And again, that day change over $5,000, but $2,000 of that is cash. And then we can see that in total, based on these stocks, and I've rotated kind of out, kind of a thing for some of these, but that gain loss is showing just relative to these stocks, not the entire account. And then if I'm going to scroll down on this, again, we can see the cash piece, the cash and money market total increased by $2,000. That's the amount I was talking to you guys about, versus the equities here up $23.63 in total, and again $33.24 just today. So what stocks do I own? What's doing well? Is there anything not doing well? Well, if we take a look at that, this account right here, based on the most that are up on a dollar value today, the one that has made me the most money today on this record rally for the Dow is OneSpaWorld. And that's really no surprise. I mean, I knew all along that, on a positive vaccine news, that this was going to be a really hot stock. This wasn't the reason I was actually owning the stock. For me, this was a company that came out and said that they had enough liquidity to be able to survive with no meaningful revenue for 2 years. Okay, so even some of my conservative estimates for the stock were that it was worth, at least $9 or $10, which brings me to an important point. So it's currently trading at $8.06. I mean, that's a big increase. It's up over 27% as I'm filming this at noon on November 9th. But that being said, it's when I still look at this stock, I'm not being greedy, but this was a predetermined amount that I said, hey, I think this stock is worth at least $10. So I'm not panicking and saying, oh, I need to sell, why it's up 27%. And I understand that there could be a pullback. I'm not going to be able to predict what's going to happen in the meantime, but this is a stock that I think that, certainly when I'm looking, a year or two out, that it's going to be worth more than $8.06. So it's not something I'm compelled to sell today, okay? The second, and I guess I should say this too, by the way, so OneSpaWorld, I mean, this is a company that I actually did a video on. I said, hey, let me talk about why I like it. Not why you should buy it, why I like it. And, of course, if you wanted to do your own research, consult with a financial advisor, do whatever makes sense for you. If you were going to determine that that would be a good investment for you, I was like, of course, that's what I want to help do. That's the whole purpose of having this channel, is to be able to communicate stocks that I think make sense for me to own, why I own them, all of those things. And you can kind of clearly see that if you were paying attention to this and you had watched that video prior, that would have paid off handsomely for you. But again, if you were doing your own research, this is not financial advice, just showing you what's working for me. So we go on the list. The next one is actually another one I've had a video on, and this is one of those stocks that's actually been my favorite investment ideas out there. And this is Maui. So what this is it's a fish farm based in Norway. But this, as of right now, it's up over 12%. So the One Spot World I made over 1,000 on so far today. Maui, I'm up over $700 today. That's been doing well. Also got Lionsgate. I haven't done a video on this one yet. I was in the preparation of actually researching to do a video on this. So, if you want to go ahead and subscribe to this channel, if you're watching this and you're not already subscribed, subscribe, hit the notification bell, and you will be alerted when I put that video out, because I think it's going to be an interesting walkthrough about what they're doing. But when we look at Lionsgate, they're up about 9% today. They also had a really strong day on Friday because, they reported their earnings. And what I really like about Lionsgate is they're showing that they're trying to strategically become more involved with the streaming business. They're doing a better job of monetizing their content, all of those things. And so I think a company like a Lionsgate, or a stock like Lionsgate, I think is a much better play if you're looking at kind of the beaten down movie industry and you were thinking at all about putting any money in AMC. In my opinion, and for my own money, I'm putting money into Lionsgate versus movie theaters, okay? And then we look at NCR. NCR, I feel like this stock is a really good example of kind of keeping your eyes open in your everyday life about what you're using, things like that, because they actually just built a new store downtown where I live. And I noticed that in this new store, they were using NCR, okay? If you look down, there's a logo that said NCR. And this stock has been on my radar, but I was like, okay, this is a new store that they built. I mean, clearly they could have, went with, a different scanning, company kind of a thing. And they still went with NCR. And I believe I was actually at Chipotle recently. They're using NCR. So it kind of led me to do my research on this. And I was coming up with that this stock was worth at least $27, $28. And I was able to pick this up at about $19 a share on average. And this one's up over 11% for me today. I also, for my own check on this one, because they're generating a lot of free cash flow, as are a lot of these companies that I own. And, when you're talking about a company that's generating significant free cash flow, it becomes a little bit easier to project out what that company is worth, because I like to run some scenarios where I can say, okay, well, what if they never grew their free cash flow again? Like, let's say you took the most recent year and they were flat for the rest of, the life of this company, or the projected life. How much would they be worth in that case? What if they grew by 3% for 10 years? Whatever the situations are, you can start to model those out. And for me, if there's a company that, if you were just going to say that their free cash flow per share could be flatlined and they're not going to have any growth, and you still look at that discounted price based on that, and if it says to me that even if that's the scenario, that the stock is still an attractive buy, I start to become even more interested, okay? So again, I think keep your eyes open about what you're using in your everyday life, and then understanding how to value that based on free cash flow. I think those are two very good tips, things that have done well for me. Also up a lot today on JP Morgan, Charles Schwab. Charles Schwab I think is funny because this is actually the brokerage when you're looking at a screen that I'm using. I started out investing in Robinhood. And, for me, I like the free trading, but as soon as the other big brokerages came out and said that they were actually going to be instituting free trading as well, I was like, okay, so I can go with an established, brand that's been around and they're much bigger kind of a thing. I'm like, I can go with an established, reputable company or the new kid on the block. They're both free now. And to me, it just kind of was a no-brainer to want to go with higher quality when I'm paying the same price. And Schwab has done really, really well. And again, basically the whole thesis there is that I think a lot of traders or investors were brought into the market, lured in by Robinhood. And I think that once they kind of experience Robinhood, I think a lot of them are starting to question if they can find a better value with another brokerage. And I think Schwab represents that. And they've been up a lot. I mean, I started buying this in the lower 30s. They're up over 7% today. Currently at $44. We look at Ford. I had a video on Ford. Same kind of thing. I mean, Ford's cheap on a lot of valuation metrics. I know they cut their dividends. That certainly wasn't ideal. But I mean, I think when you look at a lot of the things that they've gone on right now, I mean, they've got to strengthen the F-150. So year over year, they're actually growing sales there. And they've also got a lot to look forward to as far as the launch of the Bronco that I think is going to get a lot of publicity. The Mustang Mach-E, which is actually going to be, by some accounts, comparable to a Tesla. So an electric Mustang. Again, I think that that's going to get a lot of publicity. And besides just the publicity, again, just the free cash flow, you look at how this company's doing, the cost measures that they've been able to put in. I think that Ford represents a good opportunity. I'm up over $100 in them today, close to $200. Also have Fox and have Altria as well in here. Altria is, of course, the one that's actually generating the least amount of cash for me today. And that's because to me that was kind of like a safe company. I mean, to me, having somebody in Altria, I was almost looking at that as like the equivalent of like having it in cash, because I really think that the share price with Altria, for the next year or two is probably either going to be pretty flat or maybe slightly lower, but they're paying a 9% dividend. So even if this stock was going to decrease by 5% in the next year and I get my 9% dividend, well, that would be the equivalent of getting about a 4% return. And so for me, I was like, okay, I'm putting this into a company that I think is relatively pretty stable, and that's going to limit the upside as we see here, but it's also going to protect on the downside if things were to actually go against me. So that's kind of part of the reason for Altria. And then down at the bottom, so it wasn't all good. So when we look at this here, we have Kraft Heinz is actually down for me $78 today. They're down a little over 1%. And so, but when we look at that, Kraft Heinz, what's actually really interesting, right, is that initially back in March, so back when there was the first panic sell-off, Kraft actually fell a lot, but then subsequent to that, what we kind of come to find out with that was that, being locked in place and all the pantry loading done at the grocery store ended up being a net positive for Kraft. So I think that, any news that we might actually not have a vaccine or we might have to be sheltering in place longer would have been better news for Kraft. But I like the take on this. This is a company paying over a 5% dividend. I think that the turnaround that they kind of have in place to kind of have, stronger brands and the marketing behind their brands, I think it's going to pay off more than what the market currently expects. And this is another one of those companies where I think the downside is pretty limited, in my opinion. But I do think that there's the opportunity, if they get some things right, by trying to kind of reignite the growth of these brands, that, they could certainly be worth a lot more than what they're trading at today. So there you go. It was a bit long-winded, but that was just an update on this. And I just really wanted to walk through this. And again, keeping in mind that, the point of putting out this video, it's not to say, hey, I was right because I had some other videos talking about what I was doing. That's not the point at all. I think a couple of the points are, it's really dangerous to think that you can time the market, because anybody around the election, the rising coronavirus cases, I think there's a lot of people out there that would have kind of taken the position and said that, hey, it's not a good time to be in the market, but clearly it has actually worked out pretty well. So we look at those things, and then we can also look at and say, like, well, when should you get out? And I think you got to figure out what the value of your stocks are. That way you're not going to panic on up days and say you got to get out. If I'm looking at a company I think is worth $10 and it's at 8, even if it's up 20%, I'm like, you know what? I'm still going to hold on to it. So that's my portfolio update. Appreciate you guys watching. Let me know what you guys think about this in the comments below, and we will see you next video.